Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast, episode 38. Today's date is September 5th, 2018. It is Wednesday, my dudes. What is up? My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing.
The gluten-free.
What are we talking about, man?
Let's go ahead and, now that you're back, I'm going to go ahead and bring us in with the numbers. How's that sound?
Yeah, that sounds great.
All right, so today we have we have a mixed kind of day. NASDAQ selling off heavily. I'm going to start with her down 96 points. It's a 1% to the downside.
We only count it when it's down.
S&P 500 down 8 points, and Dow up 22 points. So a little sideways on the Dow there. We have cryptos selling off, altcoins getting hit really hard, but Bitcoin getting hit the least, taking it on the chin, down almost 6% at 6,936 at the day, just below the 7,000 mark. That's on the back of Goldman Sachs selling off, or not selling off, but getting out of their trading desk idea with crypto on their exchanges. So that is partially to blame, we assume, at this point. But Bitcoin Cash down 13%, Ethereum down 14%, Litecoin down 12%.
Litecoin's still moving.
Still moving, still chugging along. I think this might just be a short-term opportunity. 3-month outlook, you're going to be better off. So, kind of mixed days today. Technology selling off heavily.
Bitcoin's still a buy, the 7,000 range.
Oh, absolutely. I like it in the 7,000.
I like that 65, and I like that.
I like it. Yeah, I like it below 8, to be honest.
If you're into that
I'll say 74 under. NASDAQ sliding off the heaviest. I haven't really looked too much into it. I did get multiple notifications about Netflix leading the charge in this, so go ahead and pull her up, see what she's been doing. I'm watching you here on the Twitch. Go ahead and pull up Netflix for us. Let's see what she did. Well, I can't wait for those candlesticks to come to Robinhood.
I know, I'm ready. Down 6%.
6% on Netflix, yeah, so kind of leading the charge. Is there any sort of news on that? If you scroll down real quick, do we have any headlines? She's still sitting at $341. Dude, I remember the day I bought her at $93, and I was scared. It was like half my portfolio at the time. I was like, what am I doing?
I can look her up on Stock Twits real quick.
Anyway, I'm just curious if it was on some sort of, did they raise prices? Did they have some sort of meeting? Which one of those companies I just cannot bring myself to invest in.
I'm not seeing anything on Stock Twits.
Interesting. So we'll try to see what that is more about. If you know, let us know at rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's at gmail.com. Nathan, I kind of stole a little bit of it there, but can you go ahead and just hit us with market news with Nathan Oliphant?
Yeah. All right. So we got NAFTA talks still in the making. We have Limp Dick Trudeau taxing our dairy. Not cool. We got cool talks with Mexico. We're like, yeah, man, we're gonna do this with Mexico. We're gonna rearrange these NAFTA deals. That the market liked that, and then I think the market heard about Trump and Canada not like really caving to the demands of Trump.
Yeah. They
kind of heard about that. They didn't like that. I don't know if that's why it was down today, but who knows? That's in the news. Also, what's it called? Twitter is in front of the House Energy and Commerce Committee today to testify about the moderation of online content. So we'll see how that goes today. Lots of reports are saying that Dorsey, who is, I guess, is that Twitter CEO?
Chief
executive.
Do not.
It's chief executive.
Chief operating?
It says Twitter's chief executive.
Okay.
Says he's not taking sides in a partisan manner. So pay attention to Twitter and pay attention to what happens with NAFTA. And that's market news number 8.
All right, well, let's just keep the ball rolling. Let's get right into it. Keep the ball rolling. Today, I have market terminology. We might have done it before, to be honest, but it's another important one. This is an important one, and it never hurts to go over it. So today, for market terminology, I want to talk earnings per share. Nathan, hit me with, what is earnings per share? Why do we want it? What is it? What do we like about it? What do we hate about it? Go.
Well, it really tells you what your share's doing for the company. So when you buy the company, you're an owner of the company, and you say, well, what is my money doing? And the companies will come out with earnings reports, and they'll say, well, this is how we did. And basically a calculation comes down to how much they've actually made, and that number gets calculated or divided into the number of shares floating.
Mm-hmm.
And that comes up with it's a dollar amount per year.
Mm-hmm.
Or they sometimes do quarter.
And it's expressed in per share specifically because if Disney says they made $3 billion that quarter, and a small cap biopharmaceutical company with a $200 million market cap says that they made $3 billion, well, that's two very different things. They have very different market caps, and it means very different things for the stock. So rather than just say, this is how much money we made, they break it down into a per share basis. So when you buy that tiny sliver of that company, your one share of the billions and billions out there, it lets you know how that share is working for you. So, for example, if you have a $100 stock, the earnings per share for that quarter, let's say, is $1. That's not very strong return. There is some return there, but it's not strong.
It's not bad.
Now, what the company
stock.
On $100?
Oh, $100. Sorry.
Yeah. But what that company does with that dollar that they generated is a different story. So just because your $100 stock had a EPS of, let's say, $17, it was just a blowout quarter for whatever reason, and they generated $17 per share. What they decide to do with that $17 is can be a multiple of things. They can decide, the board of directors and the CEO can decide to keep the profits within the company in order to expand, maybe to grow the company. They need to buy a new warehouse. They need to buy a new factory. They can take that money and they can pay off some of their debts. They can pay off some of their bondholders, get rid of some of their liabilities, or they might give it back to you in the form of a dividend. So it depends on the management of that earning, but whatever the company does with that earnings is very different. Some companies do humongous dividends. Some are just monstrous growth companies like Google, never paid a dividend.
Bitches.
So earnings per share is a way to watch the value in your return and investment. It's the best way to track it. And it's always expressed in dollars. 0.72 cents per share, 88 cents per share, $3.46 per share. And that's all there is to it. So you take that, you take the earnings per share, and you take the price of the stock, and then it's a good way to see what you're getting, or it gives you the PE ratio. How many dollars you're getting. One term. I know, but you just take those two, and it's a great way to see how much you're getting per every dollar that you have in there. So if you have any questions, comments, concerns, suggestions, insults, corrections, or ideas, email us at rebeltradinggroup@gmail.com. That's Rebel Trading with 2 G's @gmail.com.
I just realized that I've been saying find us at youtube.com/rebeltradinggroup, but that's not going to get you.
Yeah, I looked at that the other day. It says not available.
Yeah.
Well, whatever. That's why I put in the show notes, just search Rebel Trading Group.
Yeah. I tried to add it to my Instagram account the other day, but it just didn't happen.
Anyway, But today, anything else before we jump into today? Let's get it. So we're in part 2 of the sector series. We started the sector series, basically, just to refresh your memory. There are 11 sectors of the S&P 500. To go over them just briefly. Have them, if I can pull them up. There we go. To pull them up briefly, we have energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunications, utilities, and real estate. Now, you can chop up the market in many different ways. You might be able to say that there's companies that cross multiple sectors. You might even say that there are other sectors within sectors, like within consumer discretionary, there would be retail and travel and, whatever. So last time we talked about consumer discretionary, and as a reminder, the symbol for that one was XLY, and that's companies, mostly Amazon is the biggest holding in it, and there's also Netflix, McDonald's, Target, Yum Brands was in there, Nike, a lot of consumer goods companies, clothing brands, vacation companies, Booking.com, Amazon, one of the more powerhouse internet retailers. And our general thoughts were I like it as maybe a long-term holding because it's going to be cyclical. So just over a 20-course year, but never a trade. Agreed?
XLY?
Yeah.
Yeah. Sure, you can put it in your portfolio. Don't make it huge.
Yeah, don't make it huge, but I like the potential there. But today, what do you want to talk about, Nathan? Do you want to talk about industrials?
Yeah, I got it up, baby.
Let's go for it. So we were going to do this yesterday, but we had a little technical difficulties. We updated some software. We buffed it out, and we're back, of course, for you guys. So today, let's talk industrials, Sector 2, industrials. Let's go ahead and start off with the ticker symbol for that one. The sector, the S&P sector for that fund is going to be XLI. XLI. And can you hit us with some of the top holdings in XLI or the industrial sector?
Give me 2 seconds. I'll be right there. Yep, I'm pulling it up right now. Scrolling down. All right. The number one holding with 8% of the portfolio, Boeing, everybody's favorite airplane company. The next one is 5.23% with 3M. Everybody knows 3M, paper products, tapes, stuff like that.
Scotch.
Then you got Honeywell. They do various like appliances, right?
Oh, they do a lot of things. They have aerospace sector. They do oxygen rebreathing systems in fighter jets.
Yeah, so they're big industrial, I guess.
Yeah, they do air conditioning units.
Union Pacific, that's railroads, right?
Yeah, baby.
General Electric, everybody knows GE. United Technologies Corp, I don't know what they do.
They weapons.
Okay. UPS, Caterpillar, Lockheed Martin, SSX, FedEx, Raytheon. That's oil, right?
Raytheon?
Yeah, Raytheon.
Oh, no, that's defense.
That's defense? Really?
Yeah.
General Dynamics, that's defense. Grumman Corp, Northrop Grumman.
They're defense.
So it looks like a lot of defenses.
Yeah, there's a lot. So that just goes back to my previous point. There's a lot of subsectors within these 11 sectors. So this isn't like the cut and dry, but this is the way that the Standard & Poor's breaks down their index. And it makes sense. So there are subsectors. So we saw that there's a lot of aerospace and defense in there. But there was also there was transportation in there. There was industrial suppliers such as 3M. There were builders like builder equipment like Caterpillar,
Deere & Co.
John Deere. Yeah. So there's a lot of subsectors in there, but if you boil them all down, they are the industrial sector. And I want you to get the ball rolling. Tell me, give me some of your thoughts on it as an overall sector.
Like, I've never really researched every sector. There's sectors that I like and that I know, and obviously we're saving those sectors. And it's gonna turn out to these sectors before are gonna be more interesting, and I love it. I'm noticing that this is your defense sector. You know what I mean? So you got Lockheed
it's
Martin.
Definitely a good defense play.
Yeah, of course. It's got a ton of plays in it. I feel like this is the backbone of America.
That's exactly what I was saying. I was like, this is the United States Fund.
This is the Donald Trump Fund.
Yeah, it really is. When you just said that, pull up the chart. What happened to this stock near the election or just after the election?
Let me get the quote. Oh,
I guarantee you it rocketed. Well, we know Boeing was a major part of that. Oh my God! Last year, Boeing was the powerhouse right with NVIDIA. That was the 2017 stocks of the year, man. Those were the two picks to have.
Let's do 3 year. What's the date? 2017, right?
Yeah.
November.
Well, elected 16 and brought in 17.
It's disgusting.
We remember it. I was at work watching Dow futures down 1,200 points.
Do you want to know what happened?
Yeah, tell me. Can you get us? I mean, you have it pulled up. You're on the Twitch right now. Show us on the Twitch what kind of movement we had.
A very high spike up, followed by another very high spike up.
Yeah, look at that. It was record highs. How much? What was the percent gain? Can you pull that?
I can calculate it.
I think if you just drag the mouse over, doesn't it?
No.
If you click and drag.
Nope.
Oh.
I can try it on Robinhood. You think I would do it on Robinhood?
Oh yeah.
I doubt that would work. Yeah, it's not working here. So.
But it goes to show you that this is kind of the Patriot Fund, and a lot of these companies these are the companies that build America, not necessarily built, but some of these companies have been around for hundreds of years. Like General Electric was 1880s under Thomas Edison. He was one of the founders of General Electric. So a lot of these companies are the backbone of America. They supply America. They give us the transportation we need. They build the buildings and offices that we need, the homes we need. There's a lot of America in there, and I like it.
It's a 14% gain from when he was after the election up until January, right before he was put into office. Well, everything fell.
A month and a half.
Yeah.
It's ridiculous. So, and that's because he decided that he was going to pump money, or he at least ran on that campaign. I don't see if we had any promises that he wanted to put $1 trillion back into the United States.
Wait. That's wrong, isn't it? Because he was elected in 2016, right?
Yeah.
Okay, so that number looked cool. Let's see what happened. Oh, same thing. Same fucking thing, except more dramatic. And then you had the longest bull run in history.
Yeah, we had that insane bull run. I would like that again. Oh my God. No, but he decided that he at least ran on the notion that he wanted to put $1 trillion back into the United States. And if that was going to be the case, which when he got elected, these were the companies that were going to benefit. Caterpillar was going to get the contracts that he wanted to pump up military spending. That goes to your aerospace. Boeing had the most incredible year last year. I think it almost doubled in a single year. It went from 170 to the 300 in 2017. It was disgusting.
Well, a lot of companies. A lot of companies benefited on the tax cuts as well.
That's true too, but this was, I think, to kind of wrap up that point. However, none of that really came to fruition. Did that $1 trillion ever come in? Because he was saying that he wanted to repair roads and fix cities' water supply systems and stuff like that. Have you seen that? Have you?
I mean, is this the first time you're getting upset about a politician keeping his promise?
I'm not getting upset, but my point is this industrial sector ran up And now, what has it been doing in the past 3 months? What's the 3-month performance on it?
Let me pull it up. Up 3.24%.
So it's been doing all right.
Okay.
It's probably still on the back of the powerhouses, like Boeing and some of the defense ones that are still taking off.
It's kind of just holding.
And
Like
it's
the whole
just
market's holding, so.
it's another one of those consumer ones, or not consumer. I'm sorry. There's one of those cyclical sectors. When the country is booming and a Republican's in office, and there's talks of
War.
There's talks of war. There's talks of nationalism and more building and, just expansion.
Nationalism is a pretty good.
Nationalism. There's more pumping. If money is going to come from the system into America, this is probably your best bet, because these are the companies that actually do it. And it's a good Republican fund, to be honest. I hate to say that, but if a Democrat goes in office, the first thing they're going to do, let's kind of cut. Where can we cut? We can cut military spending. We don't need to be drilling or building and tearing down trees. So let's, shave off some Caterpillar, give them some EPA fines. That's kind of what's going to happen. It's going to slow down, but in a booming economy, like let's go, let's build it up, let's make America great. This is going to perform incredibly. And it's not necessarily on the back of consumers. It's on the back of building companies and commodity companies. Industry. That's why it's the industrials.
Would you hold industry? Would you hold XLI?
I mean, it's hard to say because I really compare it to other sectors, and long term, I just don't think so.
What? Long term, you wouldn't hold this?
I don't know if I'd want to hold aerospace long term. It just doesn't. I know that sounds ridiculous, but to me,
What about the Space Force?
A lot of them are growth companies. Like, they rely on growth. If sales are declining, these companies are going to get hit because they have a lot of capital. And they need to be having it put to work. If you just have all these trains sitting around, you're paying the state to have these rails and crap, But if you have trains just sitting around because you're not moving coal because the economy's slowing down,
Yeah.
it all kind of adds it back in. So I feel like this one is the definition of cyclical. And secular cyclicality. Wow. Secular cyclicality. How about that for a fucking word? I like it though. Like I could see it as a strong rally play, I guess. But I don't know. I would kind of stay away from it as a overall. I don't see it as much.
Does XLF pay a dividend? Let's check right here. I got it out.
The financials?
No, XLI. I'm sorry.
Oh.
1.88
sure,
dividend. So
not a big dividend payer. And you know me, I'm not really a growth kind of guy. I'm not a grower. I'm a shower. Show me the money. I don't want to see growth. I want the money right back to me. That's the way I like to invest.
$1.45 in dividends a year. I guess you can hold that long term. You find so much more potential in other stocks.
That's what I'm saying. For like 20 years, like if you're going to build your child's college fund, okay, I need this money in 18 years. I'm going to put it in some funds. Is it going here? Would it go here or would it go to XLY if you had to choose one or the other? The consumer discretionary one we talked about.
I'd put it in XLI.
Over XLY? Yeah. For really? I am hardcore the other way. Between Disney, McDonald's, Target, Nike.
I just think these are big names, man.
They are. Are they too big to fail names? Are they recession?
You said yourself watch Boeing because Boeing moves the market. You've got names like 3M.
It does. Oh yeah, you got a lot of Dow players in there.
And Caterpillar. She's in the Dow.
Yeah, we have some Dow players in there for sure.
I like
What?
Dow players. Look at that, 47 million shares of General Electric in the fund.
I saw some fun today. I was looking at ODP, Office Depot, and they had some fund had like 45.6 million shares. It's like those poor fucks.
Gotta hold them. If you're an index, hold them. Yeah, I don't know. I like them better. I like these companies better. Well, it depends. How much does XLY pay in dividend? I'm trying to cut back
It was
now.
closer to. If you want to compare the dividends, let's do that. Pull up. You want me to get it or you got it?
It's 1.24 on $115 stock. What? 1.24.
Hey, give me just a quick second.
$1.42. $1.43 in dividends. So it's about the same in dividends, but I don't know. Personally, I like these companies better.
So who has the better dividend?
They're about the same.
About the same, yeah.
So relatively, XLI has the better dividend because it's cheaper.
I think in a recession, who would do better?
XLI.
You think so?
Yes, buy defense stocks in recession. Right? Isn't that how it works? I'm talking out my ass.
I think you're supposed to buy defensive stocks.
No, yeah, I got that.
Like,
what is it? No, when the economy, when we're at war, you buy defensive stocks.
Mm-hmm.
I just feel like that is more keen to a time of recession, a time in war. What do you think about that statement?
To be honest, I'm just not a fan of the sector just as a person.
We need more sectors to choose from.
Yeah, I mean, well, that sector of the sub, I guess you can say subsector of XLI, the aerospace and defense. I'm just not a fan, of war. I don't like going to war. Profiting off, unless it's a war I can justify. That's for sure. Like if it's a justifiable war, that's one thing. But a lot of the wars we go to are not justifiable, and they're all backed by fiat currency, and that's how they're funded and supplied. And these are the companies that, yes, will do good, but if it's another inhumane war or illegal war, it's not, to me, not in my best interest to make money off of it. I might do like a commodity play instead to still kind of, maybe I'll do like steel, something like that instead. There's still ways I can make money off of it, but holding Lockheed, and I'm just not a fan.
Yeah. Well, that's all I have to say about industrials.
I do like Caterpillar though. They're a strong dividend company.
Yeah, baby, I have them pulled up.
Yeah, pull them back up. I saw that.
140.
Hey, Joe Rogan's podcasting the same time we are. That means something.
They did well today.
Joe Rogan?
No, Caterpillar.
No, what? I owned Caterpillar at $90, and I did a dividend capture play. Are you familiar with a dividend capture strategy?
Yeah, we should go over it sometime.
We should go over it right now.
We could do it on another episode.
All right. So, yeah, anything else you want to say about it?
No, that's about all I have to say about industrials.
Is it in your kid's 20-year college fund?
No.
All right. It's not in mine either.
I'd buy a share.
Not in mine.
I'd buy a share.
That would be heavier. I'd be heavier in our last one. And we'll compare it to each sector as we talk about them. So, yeah. Anyway, it's Wednesday. I would love to do another episode this week. I like doing them
bi-weekly,
back to back. I have more fun. Gives me more to look forward to.
So tired.
I know. We work hard. Do you have anything that you're watching for the rest of the week, just in case we don't have?
The rest of the week.
Rest of the week, tomorrow, tonight.
I had a long call I was watching. You know what? I guess I'll say STOR Capital. I'll go with my STOR Capital again. I'm watching her. I bought some more shares of her today. I'm fucking loading up on her. I'm gonna start buying more of her. She's on a little bit of a dip.
Okay, and why do you like STOR?
Oh, dude, look at its earnings, and fucking look at its dividend that it pays. Warren Buffett owns it. It's sick.
So that's a nice long-term play?
Oh yeah, hold on to it, baby.
All right, I like it.
It beats earnings. Like, it says it's been expected to make 19 cents per share, and then it beats it by like a ton.
I like it. I like REITs. I'm a big fan of REIT. I think STOR Capital is a REIT, dude. I think it's a real estate investment trust. Let's give me that real quick.
I got it right here. Yeah, it is a REIT.
I like it, dude. I'm a fan. I think they're good. I think everyone should own a little real estate.
Jesus Christ, it pays a huge dividend.
I like it. What's the yield?
The dividend yield?
Yeah.
4.6. I
like it.
Yeah. For $30 stock.
Mr. Buffett likes it, right?
Yeah, he's got fucking tons of it.
Dope. What are you watching, Jason? I'm not watching a stock, Nathan. I'm watching Litecoin.
Okay.
No, I like the tumble that she's taken. Call her Scarlet. And, yeah, I like the 12% sell-off. I think there's a little opportunity here. I just think it's an unnecessary sell-off, and some of the altcoins took it a little harder than they should have. And I think that this is some opportunity. It's a great way to stay in shape.
I think it's
Where can they add us?
I think Litecoin's at a normal sell-off.
You think it'll pop back? Can we see 66, 67?
I mean, it's got like a lot of support around the 60s, so like where it is now. 60s and even 57, yeah. Those two fucking support. Here. You can add us at rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's at gmail.com. Facebook.com, that is /Rebel Trading Group. You can find us on YouTube, search Rebel Trading Group. We're on Stock Twits if you're into that kind of thing. And twitch.tv/Rebel Trading Group. We go live about every Wednesday around like 4 o'clock.
At least once a week.
Yeah.
But if you can't catch us live, we do have our videos available there. You can go back and watch us do it live.
Yeah, you can watch our technical difficulty video.
Or when we have to pee.
Yeah. That gets edited. We edit those videos. So yeah, hit us up. We like comments. We love corrections. We love inputs. The biggest thing is this show is about education. If you guys can help us learn by correcting us or giving us insight, then we love that. So give us a shout out. Give us a shout on Gmail's our best bet, I guess, or comments on YouTube too. Yeah.
Yeah. I wish someone would send in like a stock that we could talk about. That'd be kind of cool too. Like, hey, I'm looking at this. What are you thinking?
Wow, that's a good idea.
We can hash it out because we're always going to argue over it, Nathan. And that's what I love about our investing is everybody is different, but in the end, we're just trying to make money.
We should start doing that. I'm gonna start passing the word out.
Hey, ask me about this stock later. That's what Jim Cramer does. You know, that's all like pre-recorded and scripted.
All right, dude.
All right, dog. Well, without further ado.
Bye.
Okay, bye.
See you guys next time.